How to choose the right market for real estate investing. Picture this. You're standing in front of a luxurious, newly renovated property. The sun is setting, and you're holding the keys to your next big real estate deal. It feels like victory. But how did you get here? What's the secret to choosing the right market to invest in? You see, real estate can either make you a fortune or leave you with nothing but debt. The difference? The market you choose to invest in. Today, I'm going to walk you through the 3 essential steps to choosing the right market for your real estate investment, so you don't end up like so many others who made the wrong choice and lost it all. If you want to build wealth, it's crucial to make the right call. And trust me, choosing the wrong market could cost you more than money. It could cost you your dream lifestyle. Stick around until the end, because I'm going to reveal the ultimate strategy that most investors overlook. And it's the one that could change everything for you. 1. Understand the market potential. Let's dive in, shall we? First things first, understanding the potential of the market. This might sound obvious, but you'd be surprised how many investors overlook this. You can't just pick any city and expect to succeed. You need to identify markets that show growth potential. Think about it. There's a reason why certain cities are booming while others remain stagnant. Ever wonder why your buddy keeps posting about his amazing new real estate investment in a town you've never even heard of? Well, that's because he's probably investing in a market that's skyrocketing. But don't worry, we'll get you in the know. You need to look for markets where the population is growing, jobs are increasing, and demand for housing is high. Cities like Austin, Texas, or Phoenix, Arizona have been attracting people like crazy in recent years. Why? Because they're affordable and they offer a high quality of life. The trick is spotting the early trends. Look at migration patterns, population growth data, and employment stats. If there's a growing demand, you're already ahead of the curve. But how do you know if a market is actually going to stay hot? What if the trends just fizzle out? That's where our next step comes in, and you won't believe what most investors ignore. 2. Evaluate market stability. Narrator. Serious tone. Now, let's talk about stability. Sure, a hot market today might seem like your golden ticket, but you need to ask yourself, is this market stable? Hot markets can turn cold in the blink of an eye, and when they do, you don't want to be left holding a losing investment. You know how everyone's talking about the latest next big thing, like it's some shiny new toy? Don't fall for the hype. Hot and flashy doesn't always equal lasting value. Look for markets with steady growth over time. A key indicator is the real estate market's resilience to economic downturns. For example, cities with diverse economies, a strong job market, and a track record of bouncing back from recessions are your best bet. Check out places with a low vacancy rate and a stable rental market. This means people are sticking around, and the demand for housing isn't just a passing phase. A good market is one where investors keep coming back year after year because it's built on sustainable growth. But what if you're on a tight budget? What if you don't have millions to throw around and you need an affordable market to get started? I've got you covered in the next section, where I'll reveal how to capitalize on emerging markets. Markets that most investors won't touch yet. 3. Leverage emerging markets and local trends. Here's the golden nugget: emerging markets. These are the markets that haven't fully exploded yet, but the signs are there. The big players haven't noticed, and that's your chance to get in early before it becomes the next hot spot. You ever hear someone talk about how they missed the boat on a big investment opportunity? Yeah, that doesn't have to be you. Emerging markets are often found in up-and-coming neighborhoods, smaller cities, or areas where local governments are making major investments in infrastructure. Think about it. When a city upgrades its public transport, roads, or schools, property values tend to rise. These hidden gems could offer you higher returns without the hefty price tag that bigger markets come with. So, how do you find these markets? Start by looking for areas with government investment and revitalization plans. Research cities that are undergoing urban renewal projects or looking to attract major businesses. These places might have lower entry costs but have massive potential for long-term growth. And here's the kicker. What if I told you there's one overlooked factor that can completely boost your returns in any market? Most investors are missing it, but those who use it, they're crushing it. I'm going to share it with you in just a moment. So, here's the deal. Choosing the right market for real estate investing is the most important decision you'll ever make. Understanding the market potential, evaluating stability, and leveraging emerging markets. These are the steps to building a real estate empire. But it all comes down to one thing: taking action. If you want that dream lifestyle, the financial freedom to live life on your terms, you've got to get in the game. The market isn't going to wait for you. Make your move, choose wisely, and start building that wealth today. And hey, if you want more tips on how to find the perfect market, hit that subscribe button and join the community of real estate moguls who are taking action. Your future starts now. See you in the next one, where we'll reveal the secret weapon that's going to change the way you invest forever. Trust me, you won't want to miss it.